Welcome back to Investing Talk Podcast.
Today we're looking at Niagen Bioscience.
Okay, let's unpack this, because I have to be honest right out of the gate. When I see bioscience and, consumer supplements in the same sentence, my skepticism radar doesn't just ping, it starts screaming. I immediately picture those late-night infomercials, fancy marketing buzzwords, and very little actual science.
I completely get that. And frankly, that skepticism is healthy. The wellness industry is, well, it's full of snake oil.
Right.
But here's the hook, and it's why we're talking about them today. Niagen Bioscience isn't a supplement company trying to sell you, like, a multivitamin. They are a bioscience innovator.
A bioscience innovator?
Yeah, operating right at the cutting edge of the healthy aging sector. They are tackling a problem that every single one of us is facing, whether we like it or not.
Aging. I definitely feel that one. But healthy aging is a massive, kind of a vague category. What are they actually selling? What's the core mechanism?
It comes down to a specific molecule called nicotinamide riboside, or just NR for short. Its main job is to boost levels of something called NAD+ in your cells.
NAD+. Okay, I've heard the acronym, but let's break that down. What is it actually doing?
Think of NAD+ as the currency your cells use to do business.
Yeah.
Every time your body needs to create energy, repair DNA, or fight off inflammation, it has to pay for that process using NAD+E.
So it's like cellular fuel.
Exactly. But here's the problem we all face. As we get older, our NAD+ levels just crash. By the time you're middle-aged, you're running on empty.
So that fatigue, that feeling of slower recovery,
Yeah.
that's a bankruptcy of cellular fuel.
Precisely. It's not just feeling tired. It is your cells literally losing the ability to perform basic maintenance. And what Niagen is selling is the only patented, clinically proven way to refill that tank. And the so what here is massive. We're looking at a huge demographic wave in aging population. But unlike generic brands, Niagen Bioscience has built what I call a fortress of intellectual property. They're not relying on marketing hype. They're relying on hard data.
Okay, that does sound more promising than a detox tea.
Yeah.
I'm listening. As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us out.
It really does.
Now let's open the books. I want to look at the raw numbers, because a good story doesn't always equal a good investment.
Let's dive in.
Okay, I'm looking at the Q3 2025 numbers here. Net sales came in at what, $34 million?
34 million?
Now, that's not a tiny microcap, but it's not exactly a blue chip either.
It is a solid number on its own, but you have to look at the trajectory. That represents a 33% year-over-year increase.
33%. That is a significant jump. I mean, that's nothing to sneeze at. But I have to play the skeptic here. Is this just a flash in the pan?
That's the right question.
Was it just one good quarter? Or is this growth sustainable?
And when you peel back the layers, it looks structural, not accidental. It's being powered by two distinct engines. First, you have their consumer products. That's their flagship brand, Tru Niagen.
The bottle on the shelf.
Exactly. But secondly, and this is crucial, they have the ingredients segment.
So they're selling the raw material to other companies, like the Intel Inside strategy.
You got it. They sell the proprietary Niagen ingredient to other companies. But the real accelerant here is distribution. They are aggressively expanding e-commerce, and they've just unlocked a massive door with new partnerships that allow for HSA and FSA access.
Oh, hold on. I saw that in the notes. That's actually a really big deal. You mean people can use their pre-tax health savings accounts to buy this?
Precisely. Through partnerships like TruMed, consumers can use their pre-tax dollars. This is effectively a regulatory hack.
So the consumer gets what, a 30% discount because they're not paying tax on that money?
But Niagen Bioscience still gets their full margin.
That is brilliant. It psychologically shifts the product from a lifestyle luxury to a health necessity.
Exactly. It legitimizes it. It's no longer just a supplement. It's a qualified medical expense.
Okay, let's look at valuation. As of January 2026, I'm seeing a trailing PE ratio of roughly 25, forward PE of about 20.
Right.
To me, 25 times earnings feels a little rich.
Yeah.
I mean, is that expensive for what we are looking at?
If this were a utility company or a bank, yes, it would be expensive.
Right.
But you have to compare apples to apples, right? For a bioscience firm, growing revenue at 33%.
Okay.
It's actually quite reasonable. In biotech, you often see companies with zero earnings trading at massive multiples. Here, you have real earnings and high growth. A forward PE of 20 suggests the market expects earnings to catch up quickly.
What about the balance sheet? Are they paying a dividend? Share buybacks.
No dividends and no buybacks.
See, that always rubs me the wrong way. I'm holding the risk and they won't even pay me a yield.
And honestly, you shouldn't want them to.
Why not? I love a dividend.
It's because they're in growth mode. If they paid you a dividend right now, you should probably consider selling the stock.
Okay, that's counterintuitive. Explain that.
Dividends are generally for companies that have run out of ideas. If a company gives you cash back, they are basically saying, we don't have a better way to use this money to grow.
Right.
Niagen is trying to conquer a global market. They are pouring every spare dollar back into R&D and clinical trials. You want them spending that cash on building the moat.
Fair point. If you have a machine that turns $1 into $2, you keep feeding it. Speaking of which, the competitive moat. You mentioned this IP fortress, but can't anyone just make an NAD plus booster? I feel like I see anti-aging pills everywhere.
This is the single most important part of the whole thesis. Yes, anyone can slap a label on a bottle and call it cellular health, but they cannot sell Niagen.
Why not?
Because this company holds over 55 zero-owned or licensed patents. Over 50. And it's not just paper protection. It's backed by over 35 human clinical studies demonstrating it works. There are over 500 published studies on this specific molecule.
So if a generic company tries to copy them,
they run into a wall, they'd have to license it from Niagen or face a lawsuit. And if they use a different molecule, they don't have the clinical data. They don't have the proof.
So it's the difference between a proven drug and mystery powder from a lab overseas.
Exactly. There are high switching costs for the consumer. If you're taking something that's clinically proven, are you going to switch to a knockoff to save $5?
Probably not. You don't bargain hunt with your biology.
That IP is the moat. It turns a commodity business into a monopoly business.
Okay, the fundamentals seem solid, but the market doesn't always care about fundamentals in the short term. Let's pivot to the charts.
Let's look at the price action.
So we are trading around $5.68 right now. And I have to say, the recent performance, it's ugly. Down almost 7% in one day and down over 17% in the last 90 days. So it looks like it's taking an absolute beating.
It does look rough if you're only looking at the last 3 months. But you have to zoom out. Context is everything. If you look at the 3-year total shareholder return, it's approximately 3x.
So long-term holders are still up significantly, despite the recent drop.
Massive gains. And here's where it gets fascinating. In the past, this stock has traded as high as $65.99.
Wait, nearly $66? And it's at $5 now.
It was a different era for the stock, but that historical high implies there is massive psychological room to run. We aren't hitting a ceiling here, we're looking at a floor. The technical setup right now looks like a basing pattern.
Okay, basing pattern. For the folks listening, what does that actually mean?
Think of it like a spring being compressed. It went down, it found a level of support, and now it's just hovering there, building pressure. I see it as a coiled breakout opportunity.
So it's waiting to spring.
Exactly. That recent weakness, the 17% drop, is likely just volatility. It's noise. But the news flow about their B2B launches and that Amazon expansion, that's building momentum under the surface.
So you think institutional volume is watching this level for a reversal?
I do. They see the valuation getting cheaper while earnings go up, and they are likely waiting to step in.
Okay. Moving on to market sentiment. What is the street saying? Because the chart says sell, but the fundamentals say buy.
Right, and that's often where the opportunity is. The overall mood is predominantly neutral, but with these really strong bullish undercurrents.
I'm looking at the data here. The top stories are a mix. We have valuation assessments that are pretty neutral, but then we have some explicit bull case theories popping up.
Yeah.
And the news about Amazon and the HSA partnerships, that's all positive.
It is. And look at the analyst actions. We haven't seen massive upgrades for 2025 yet, but, and this is key, the company reaffirmed its full year 2025 outlook.
Why is that so significant?
Because in this market, if things were going wrong behind the scenes, they would have lowered the bar. They would have cut guidance. Reaffirming it signals real internal confidence. They're telling the market, ignore the stock price. The business is on track.
And I see Redire Research has a bull thesis out on the healthy aging momentum.
Correct. The macro trend is undeniably in their favor.
What about insiders? Is management buying?
High insider ownership is implied here, which is common for this kind of growth stock. Management's incentives are aligned with shareholders. They want the stock to go up just as much as you do.
That's always good to see. But we have to look at the risks. Let's play devil's advocate.
Please do. Hit me with the bear case.
Risk number 1, price weakness. You spun it as a buying opportunity, but a drop of nearly 18% in 3 months is scary. Is this just market turbulence, or is something actually broken?
It's a valid fear. But looking at the data, specifically that Q3 sales beat of 33% growth, nothing fundamental is broken. Sales are up and the stock is down. That's a divergence. The drop is likely a priced-in dip while the market waits for the next catalyst.
Okay, risk number 2, competition. The supplement aisle is a war zone. Even with patents, couldn't a big player drown Niagen out with just pure marketing noise?
Marketing noise is always a threat. But remember the moat. Patents and clinical data are the ultimate shield. You can't market your way around a patent lawsuit. And the informed consumer cares about efficacy.
You think they're smart enough to tell the difference?
I think consumers spending $50 a month on a supplement are doing their research, they're reading the studies, and 35 human clinical trials is a hill that is very, very hard for a competitor to climb.
It takes years and millions of dollars, a real barrier to
Hard to
entry.
say.
All right, risk number 3, the speculative nature. The valuation relies on the story of future clinical data. If the next study comes out negative, doesn't the stock go to zero?
Zero is extreme given they already have real sales. But yes, a bad result would hurt. However, we have a catalyst calendar. Q4 earnings are coming up in May 2026. Plus, there are pending data releases. These are events that could completely invalidate that bear case.
So we aren't flying blind. We have waypoints approaching.
Precisely.
All right, we've looked at the numbers, the charts, the mood, and the risks. It's time for the final score. What is your verdict on Niagen Bioscience?
Taking everything into account, the 33% growth, the patent moat, the expanding access, and the reasonable valuation, I am assigning a bullish score of 8 out of 10.
An 8-10, that is pretty high. Give me the elevator pitch.
Niagen Bioscience is leading the NAD+ revolution. This isn't a fad, it's biology. They have 33% sales growth powered by a patented molecule. They're expanding access via Amazon and HSA channels. And they have a massive IP fortress that de-risks the investment.
And a price.
The recent price dip offers an attractive entry point for a multi-year hold, targeting clinical and regulatory milestones that could re-rate the stock much higher.
So we're looking at a long-term play on living longer and healthier.
I like it. It connects that big picture demographic trend with a well-run company.
Absolutely.
Well, there you have it, an 8-10 for Niagen Bioscience, a fascinating look at where science and finance collide. Don't forget to subscribe, like, and comment to this video to support the show. We'll catch you on the next one.
Thanks for listening.